Hi, I'm Justin Rabin, Senior Mortgage Advisor with Fountain Mortgage. Today we're going to be talking about some different aspects and benefits of refinancing your home. Three things immediately come to mind. First thing is lowering your interest rate, which would then lower your overall housing expense and your monthly payment. The second thing would be to lower your term repayment that you're on. So say refinancing from your 30-year fixed loan to a 15-year, which is going to shave off your overall years that you have to repay on your mortgage. Third thing would be to take some cash out to do some repairs on your home or consolidate some debt. The general rule of thumb is the more equity that you have in your home, the better terms that you're going to get, for the more cash out you can get. And equity is measured from the amount of debt that you currently have in your mortgage balance to what your house would appraise for. One really popular refinance option that we have right now is if you're paying the pesky PMI or mortgage insurance as part of your monthly payment, you can refinance out of that and not have to have an appraisal completed, an updated appraisal, and then get rid of that mortgage insurance. It's a really popular refinance option we have right now. Credit scores can have an impact on your refinance, more so in the terms that you're going to have available to you. So the higher your credit score, oftentimes the better the terms are going to be for things like your interest rate. As far as your credit history goes, my recommendation is to, just don't, stop paying on your bills or have, a bunch of late payments coming in your credit report, because that can hurt you as far as your qualifications for a refinance go. The main upfront out-of-pocket expense that you can expect from a refinance is generally the appraisal cost, and the cost for that will vary a little bit between different mortgage programs. So what my advice would be is to reach out to one of our mortgage advisors to see exactly what you can expect for that cost. We do have several programs where the appraisal is waived altogether. That would then leave you with no out-of-pocket costs. Another really popular refinance option that we have right now is converting your current, if you're in a 30-year repayment term on your loan or your mortgage, is converting that to a 15-year, which is going to reduce your term for the loan and get you faster to where we all want to be, which is mortgage-free at the end of the day. So, typically your payment will go up a little bit, but one of the biggest things, especially if you bought your home in the past, say, 3 years or so, is that, from an interest rate perspective, a 15-year is going to have a lower interest rate when compared to a 30-year. So combined with the lower rate and the lower overall balance for your loan, we oftentimes see where your payment is almost staying about the same to shave those years off of your overall mortgage. One of the most common questions we get with a refinance is, what are your closing costs? You can skip a couple of mortgage payments, what you have in your current escrow balance, you can get that refunded back to you also. So, it's in a way, on top of the cash out that you'd be taking out through the refinance, you can also receive those benefits as well. Again, my recommendation is reach out to one of our senior mortgage advisors, and we can provide you with a full breakdown for exactly how everything's going to look. So there is a ton of information out there, online, on Google, that unfortunately is misrepresented. It's not accurate. Oftentimes you'll see some information that tries to show you, monthly payment numbers that are lower than they are really going to end up to be for you. So when it comes to making sure you are getting the sound advice, your one tool should be contacting one of our senior mortgage advisors.